This is our Forex blog video for October 22nd, 2012. And like we do most days, the first step of our easy three-step Forex trading system, which people can learn, even if you've never traded Forex before, very quickly in less than a week, is to use our currency meter. This is made up of multiple different statistical tools that compare every currency to every other one on multiple time frames. And you can adjust these weightings however you want. You can see I have the monthly trend 4% of this weight, weekly trend 13%, the statistical daily trend 18%. That makes up about 35%, and therefore 2/3, 65% of this trend strength is very fast statistical tools. Some of them measure the percentage of, in this case, yen pairs going up or down. Today was a down day for the yen, and other tools measure the intensity of that down move. Trends can go up or down by slowly inching their way up or down, or with a little bit more velocity and volatility, or they can explode up or down. And so our tools have multiple different ones that measure the directional intensity, and also uses a smaller percentage of daily, weekly, monthly to give you one easy to read indicator. Our old currency meter showed the real-time trend strength on the top. Underneath that we had the 15-minute trend, hourly trend, daily, weekly, monthly. Now obviously on down days like this, it's very easy to tell that you just want to sell the yen, but sometimes currencies will trade, as you can see the Australian here, the real-time trend's up, 15's up, the hourly's down, the daily's down, the weekly's up, the monthly's down. What do you do in this case with the Australian earlier in the day? And this confused many new traders. So you can use this type of currency meter, or if this confuses you, I've been a big fan of our old currency meter, but I actually like this one better. It's just intuitively obvious. It really keeps you into the best trades. The yen is weak. You want to sell it versus the stronger euro. The euro or the yen and the euro and the Swiss tend to rise and fall together. The Swiss is pegged to the euro. The pound's also strong today, and the New Zealand's strong. So these are ones you want to buy. You want to buy the euro yen. You want to buy the Swiss yen, you want to buy the pound yen, and you want to buy the New Zealand yen. So let's bring those up. Here's the euro yen. I'm going to bring this up. The triangles on here are, for the most part, trend trades or support resistance trades. The circles are counter trend trades. We're basically looking for buy signals on this. And some of these trades, this went from a downtrend to an uptrend, and it went up statistically too far. You're basically using the real-time build your own trend. I do not have the longer time frame trend weighted in this. These are trades I would consider a very high probability. This breakout here, this breakout, and once it gets above our upper containment bands, you really want to wait for a decent pullback. So this is a decent pullback. You got a counter trend buy signal here, which works, and also this trade here works. We're focusing on buys in this case. You use the counter trend signals and sell signals as places to maximize your profit target. If you're here or here and this starts going up, you get some counter trend signals coming in, another signal, you're out of your trade. You wait for it to go below that bar's low by 1 pip and you get out. So you would have been out of that trade here at 90 and this trade at 47. Wait for a decent pullback, you're in somewhere around here. I would use the trailing stop for a small, pretty much break even small 5 pip win. And again right here, counter trend signal, I would have probably got out right here and missed this remaining move up. Once it goes above the upper red or green 3.0 band, it's very high probability reversal. So you can make 5 or 10 pips here, short here, make 15 pips, comes back up and double tops and fails to go higher. You can go short again, and this is a decent pullback trade. It went up about 15 pips. Got another one right here that went up. This one here went up, and this one here went up. But basically, you're focusing on buying the euro versus the weak yen. Now let's take a look at the pound. Okay, so we're going to scroll this back.
Double step high.
We're going to scroll this back, and keep in mind that these trade signals do not at this time use the build your own trend statistical tools. They are using many different patterns that spot high probability trades in and of themselves based on bar patterns and some of our statistical tools like the FX Power Index that counts the percentage of trends up or down. It does not yet at this time, because it's very hard to line this up real time up with past historical bars. You want to use these signals and take the trades that go in the direction that you're looking to buy. So starting today off, here's major resistance, last week's point of control, yesterday's point of control. When it breaks above there, that's a pretty high probability trade. It's gone up statistically too far, so you really want to wait for a little bit of a pullback. I like kind of two-wave pullbacks, like this one. It went down, up, down again. When it breaks out again, that's a very high probability one. You can skip one up about 50 pips. And above the 3.0 green band, it's just up statistically too far. So if you want to do a counter trend trade here, you might have made 5 pips. Again, at the weekly point of control, fell about 15 pips. Here, fell about 15 pips, and so forth. But you can see, just knowing that this currency, without a doubt, is one of the 2 strongest ones, and then New Zealand as well. We'll bring that up next. As you're focusing on buying these currencies. Okay, here was the 3rd strongest. And again, I must, for the record, just state that these FX trade signals do not use the build your own trend. So we're hoping to add that to it over the upcoming months. But in the meantime, when the currency meter shows you that one of the better ones to be buying is New Zealand because it's so strong on all time frames, and the yen is so weak on all time frames, and when you go bring up the New Zealand yen chart, you ignore the sell signals, and especially when you have in real-time momentum at that time over 80, it's not likely to sell it. When the market's weak, you want to take the sell signals. When it's strong, you want to focus on the buy signals. There are some patterns that are very hard to teach a computer. One of them is a breakout from underneath above the hourly. It's kind of finds support here. It proves that the breakout's real. Anytime you break from below to above a resistance area, then it comes down and retests it. When it breaks out over this high, it's a very high probability trade. This is one of the patterns that we teach in many of our older videos. If you watch our videos, you're more than familiar with this type of pattern, especially with currency that's strong on all time frames. And you can see it explodes up. We got some counter trend signals. We're above the 2.0 white band. It's very likely to kind of run out of steam up there, and it does. In this case, the other 2 currencies are so strong they kept continuing. Then you get a pullback, and we got a buy signal right here. That trade goes up about 30-35 pips, and some counter trend signals let you know to get out of that trade. And in this case, like you'll find most of the time, the counter trend signals at these upper bands are very high probability. You got a little bit of a pullback. I'm not so sure I would have taken this one because it did hit our upper band, but this trade did work and went up 15 pips. And another pullback. This one went up 5 pips. 2 buy signals right here. The market, went up about 15 pips on both of those. But the point is, you use our very easy to read currency meter, which I've made it. If somebody can't figure this out, then you have no business trading because this is as easy as I can ever get it. Obviously, I thought this was, but it confused traders. The New Zealand real-time trend strength was up. The 15 hourly was for the most part up. The daily and weekly trend was up. Monthly trend in this is slightly down. I only weight the monthly trend 4% in the new weighting just because it has such a little impact on what the currencies are going to do. You can see the euro is strong on all time frames, daily, weekly, monthly, real-time, 15-minute, hourly. And if you look at the euro today, it's clearly, without a doubt, stronger than even this, mostly strong New Zealand. So it's very intuitively obvious. Now let's take a look at the Swiss. This is not a currency I typically leave running, so we'll just bring that up. Swiss yen, this is another one because it's pegged to the euro. It's going to be going up today. You want to buy it, and if you don't have our tools, these are pretty much the methods that you're looking to do. Here the market breaks out, makes a higher high, a little flag pattern breaks out. I'm looking for at least a 15 to 25 pip pullback. So this is the pullback right here. If it breaks out over that area I want to get in, it doesn't. It comes down and finds a low right here and breaks out, takes off. Now this isn't much of a pullback, so I don't like to buy flag patterns at the highs of the day. I don't have any problem at all buying them on the first move up for the day, and if it shows a lot of statistical strength. I'm going to just pass on this trade myself, wait for a little bit of a pullback like right here, right here. I'm going to be very careful. I probably would have went long right here with my stop underneath the low. And a lot of times in currencies and other markets as well, they just stall and reverse at double top. So typically when currencies have gone up statistically too far, or they've gone up another wave, 3 waves up or more, typically currencies stop going up in reverse kind of with double top patterns like this. So anytime you have a double top pattern, you might want to wait for a deeper pullback and see if price can go underneath the previous swing low. If it can't, you get in. This one came back up and wasn't able to go back to the high. So at that point, it's a very high probability reversal. The market pulls back again, and again, it's not able to go through that low. So this isn't the best trade in the world, but when the currency pulls back and doesn't break the previous lows, it's a much higher probability trade than if it does break these lows, which means there's more sellers, less aggressive buyers when lows are broken.